The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruit Stock Club. Right. How's everybody doing out there? Hope you're having a great week so far. If you don't know me, my name is Donald Green. I'm the founder of the First Fruit Stock Club. I come here every Wednesday at 10 o'clock to talk about the stock market, my favorite topic. So let's get into it. Man, back to school. My son, this is his first, both of my boys. I have a 10-year-old and a 13-year-old, and these are pivotal years for both of them, right? My oldest is in 8th grade, so he'll be going to high school. I can't believe that. Can't believe he'll be going to high school. I mean, I talked to my wife. It's like we, with, whatever happened to COVID, and when the kids were here, it's like, I mean, that time it just flew by, right? And it just seems like that just time is moving fast and fast. My wife and I, we started a little bit later, but we had to start, kids when we're ready. That's the thing. You have to, you can't have kids and not be ready. So we enjoyed each other for a while. But anyway, we have an 8th grader, and my youngest is in the 5th grade, right? So he'll be going to middle school next year. So we're going to have a lot of transitions next year. And looking forward to that. Looking forward to this school year. I know my wife is at home most of the time, 90% of the time, and I'm out working. So she deals with them in regards in the morning, as well as in the evenings when they come home. So, but majority of the day they were here, of course, during the summer. If we weren't traveling, we had a chance to do some traveling this year. Went to New Orleans, man. Got a chance to spend some time in New Orleans and also in Michigan. Saw some friends. My first time to Detroit, Michigan. Let me give a shout out to Detroit, Michigan. If you're from Detroit, had a great time spending some time with some friends, some food. Just had a great time, man. So summer is here now. We're in a new season, right? New season, the beginning of school. And so, as the season changes, so do our lives and everything that's going on. So it's important that, we have to develop some new strategies. And I say, and this September, today's topic is risk off. Today's topic is risk off trading. I believe, September is naturally one of the weakest months in the year for the stock market, and we'll see if this is going to be any different. Now, it may be different. Tonight, I'm going to talk about a few things. I'm talking about Nvidia. I'm going to discuss the SPY. I'm going to go into Salesforce and why I think it's real important to talk about to discuss Salesforce. And we're also going to talk about my monthly goal of hitting that $10,000 and trading revenue, which I talk about and I'll tell you where I am in the process. All right, so before I move forward in all the topics, man, please like, subscribe, and share the show. financial information is important. There's definitely a lot of things to talk about online, but we need to move our finances forward. The disclaimer: the information provided in the First Fruit Stock Club podcast is for educational and informational purposes only and should not be considered financial, investment, tax, or legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including the potential loss of principal. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. The First Root Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. So yeah, I believe that September is going to be a risk off month, and it's not new. September is one of the weakest. September, October, historically are two of the weakest months when it comes to investing in the stock market. But we should not be afraid, right? We should be prepared, right? Being prepared, having cash available, and just get into that. And I'm gonna get into this a little bit more because I don't talk about this enough. And I discussed this last week about the strategy of saving. And but the question is, how do you save in a economy like this? Now I'm gonna get into the investment and we're gonna talk about Nvidia. But the bottom line is I name my company the First Fruits Stock Club. We are an investment club. The first fruits should be sacred to you. Your first dollars that you generate, that you earn, should be sacred to you. And what happens is that as the economy moves on, you don't treat those dollars as sacred. Those dollars are for giving, 10% giving, and another 10% should be investing at a minimum, right? That's what I think. And if you can't start there, you can still follow the first fruits strategy and method, even if you have to start at 1%. As long as as long as the first dollars that you earn are going to investing and giving, that is the foundational message and strategy that I have for the club is those first dollars, giving and investing. You have to do it because what happens is we have times like this where inflation is high, um, prices, of course, increase. Stock market is pretty rocky in regards to incomes rising. They're definitely not rising as fast as the cost of things. So you always have to have the mindset that you're going to have to earn more in the future than what you have. All right. So always remember the first fruits. That is the foundational that I try to get in. And I'm gonna talk about this every week. The first fruits, the first dollars. I just want you to be aware of those first dollars. And even if you take that first 1% or 2% and build it out up to 10 to 20, right? Being aware, taking those first dollars and the act of putting those monies away and giving and investing, then makes you it gives you the opportunity to fight back this economy, which is a bully. I always talk about this economy is like the ultimate bully, right? And it gets you really comfortable. You get comfortable in your job, you get comfortable in your lifestyle, and then it then ratchets up inflation and the cost of things. And then it basically it makes you have to pay or you have to earn double what you're earning just to keep the same level of lifestyle. All right. So first fruits help you do that. And as you building that first fruits out, the investment account continues to grow. Giving becomes easier, and mentally you can wrap your head around not having to spend your entire income, which is maybe a little tough right now, but it's the foundational uh, point that I try to get through to the club. All right, so the objective always people who come to who watch the show and want to come come to the club. Basically, our goal is to help investors generate consistent income from their brokerage account, right? Learn strategies designed to create cash flow, not just for your account to grow, right? Also, people who are looking for side income, who need to grow their income and don't have a lot of time. Those are people who have interest in a club and have interest in working with us, and we help people with those strategies, right? And the goal, of course, every week is, and the goal a month is a $10,000 in a month, $3,000 to $4,000 in dividends, which I earn about double that, but that's the goal of the club. $5,000 in trading. Trading's been a little light. All right, $2,000 in long-term gains. The goal. Trading has been a little light the last few months. The market has been extremely volatile, extremely hard to trade. The way I trade, what we do is we do long-term options. We do leaps. So in order for that, with the leaps, then kind of need the market to have a few consecutive days up, or it doesn't have to have a bunch of consecutive days up, but a few consecutive days up, and maybe um, not a large down day. But the market's been very volatile, right? And what we need is, for the market structure, which is the main thing, which what I discuss is that our market structure, right? We want risk on. Risk on is what everybody wants. We want the stock market to be moving up. We want higher highs, right? We want higher highs and we want higher lows. Like the stair step. I call it Mario, where the market is moving forward and basically information is positive, and the market believes that in the future the stocks will continue to grow. But what's going on right now is the market is in a risk off mode. Now it's very volatile and it's very indecisive, right? Indecisive in its decisions, like it's up and down, and it's because we have a few things going on, a few things coming, right? The war, interest rates, Nvidia reports, and the midterms. Those are the different things that are in the minds of investors. So people aren't really willing to go out on a limb and just put money in the market until we unravel some of these things. And that's how the market can be indecisive, right? And there's no really there isn't a really lot of support. I didn't update the SPY, but I believe between 769 and 720.29 is a SPY. And I think next month we're going to go back down close to 729. I've been saying this for last few weeks in August. August has been a pretty mild month. But I think we're going, we're going to test that 729 again in the market. The SPY is the S&P 500. It tracks the S&P 500 because you can't invest in it directly, but you have it tracks the S&P 500, which is the largest 500 stocks in the United States, and it allows you to invest in those stocks as an index. So because of that, I'm pretty cautious on what's going on and what we're doing right now. And we had a good update today, and tomorrow maybe an update also. Nvidia reported. It closed down today at $3.39, but it rebounded after hours. I think it's up almost 5%, close to $10. But let's get into Nvidia and the earnings report that we received from Nvidia. All right, so Nvidia for the quarter did $96.2 billion. $96.2 billion. And the CEO stated that he believed that Nvidia will double the next second quarter in 2028, and revenue will grow up to 70%. And it was estimated that it will only be 50%, right? But they course, Nvidia does blows away expectations, right? And it says the new chip, Vera Rubin, is ramping up the highest in company history, right? And and it's basically being deployed by all the hyperscalers, which is Meta, um, Google, Alphabet, Microsoft. Every all the hyperscalers are using it. And the crazy thing about it is they said that 70%, it's only at 70%. It should have been higher, right? But they have supply restraints, which is memory, right? Memory is a restraint. It's something I talk about in the club. Is a restraints in the market, and everyone, that's why the prices have continuously gone up, and everybody's always nervous about AI, but the prices continue to go up, and the demand is there, right? Demand is there, and but I thought Um, looking at Nvidia, I thought that this was a phenomenal quarter for them. But one of the things they did in listening to what they stated is that they said that they are financing some of the chips. So that circular deals that they're doing, some of that revenue is financed through that. Okay, they're financing and they're counting that as revenue, right? And so when we look at earnings per share, sometimes, you kind of have to break out some of the different things. And I'm going to give you the base and point on Salesforce, who also reported a great quarter. Salesforce, they said Agent Force um, reported $4 billion in average or annual reoccurring revenue. They had a one time investment gain of 4 billion. And I'm gonna talk about this is like how companies also invest, right? What they invest in their, take their cash flow, and that's something like I said we should be doing as individuals, but we have to budget first. But taking our cash flow and invest in the market, it means it's no secret these companies invest in other companies also, right? Because you can earn money on money. Why would they just have their money sitting around? Right? They're fiscally responsible. Well, I mean, maybe, they have a lot of the capital capex right now, but they're looking at it as a future investment. They're going to have a future investment, and they plan in the future to get a return on investment. I believe, right? I truly believe that these the hyperscalers are really at a discount right now to the market. If you look at their PEs, and you look at, you go into their earnings on a, median or average, and they're really below, right, in regards to price to earnings. They're trading really below their price to earnings on average. So I believe that it's a great time to buy those companies, even though they have the capex, because what's going to happen is there will come a period of time, and you can look back with what happened with Facebook, where they say, "Hey, look, we're not going to be investing, and we're not going to be spending as much in capex." And when that happens, these companies are going to take off. Now, we hopefully that the investments that they're making in AI, that it will pay off, because that would be a double, you know, portion in regards to the returns that we'll receive. But I believe, investing in the hyperscalers right now, Google, Alphabet, all the companies that need use the chips that are investing in AI and they're expecting a return. Whenever they decide to slow down that, I believe those companies are going to take off. And especially if they're showing an increase in income. But right now, they're not favored right now, just for the fact that because they're spending so much of their free cash flow. These are just like you and I. If we, after we pay all our bills, we have money left over, which is our cash flow, and we have to decide what we're going to do with. They're taking that extra money and they're reinvesting back in the future, which they consider it as AI. All right. So that's what I think is a great opportunity for your long-term portfolio. In the club, we really kind of break it down three portfolios. We break it down in a dividend portfolio. Like I said, the goal was to get the club to earn $3,000 to $4,000 in dividends, and I give them a structured dividend portfolio. And it's once they get to a certain point, I can accelerate that, right? Um, Trading revenue goes to get to $5,000, and I've had higher months, but $5,000 has been I don't think a small a large hurdle, but for the last few months, it has been a hurdle. But you know, August I really just didn't do a lot of trading. Like I said, it was very bumpy month, and could not get some consistency in the market where I felt like I would be able to extract trading income from. So, like I tell everybody, hey, we just take the dividends and we just sit on the side of the market. And that's the great thing where you just don't depend on all trading revenue and active revenue. You have passive revenue coming in from dividends that you can still use, right? That you can still use in your daily, whatever you're doing, and it allows you to save money and position yourself to have cash available when the market presents the opportunity. And right now, the opportunity I think will come in September. It may not be that big. You know, I was expecting a really big fall in September, but because July and the whole issue with the hedge fund trader and the market took that deep dive, and I got my butt kicked. Right. I think that September, May, and also because Nvidia is up after hours. We'll see how the market closes tomorrow, but Nvidia has um, has beat expectations. So these are some of the things I call this new segment called market moves, like Nvidia reporting. Also, I like gold and I like oil right now. Gold and oil are two. Gold is moving up right now, and some of the reason I like those in commodities and Nvidia. I mean, I already have the club already has a large position in Nvidia right now. It's one of my largest holdings. We have a large position in Nvidia. I don't think the how Nvidia will grow, on earnings. I think those days because the expectations are so high, right? I think there was a study done upon like some of the top gains in the market, and they found out that excuse me, a lot of gains in the market come through high expectations. When you beat expectations, and that's when the market expects a stock to do average, and it does way above average, and it surprises everybody. Surprises in the market. That's what it was. Surprises in the market. Well, you're not getting any surprises from Nvidia right now because it's expected. All right, so that's where we are with Nvidia. Man, I thought I thought I'd talk about because we're back to school and had to do back to school shopping. I don't know about your kid. My kid, for some reason, he's just in this black thing. He's wearing all black now. I'm like, dude, you need to get some more. You're not having black, three or four things of color black. It just makes no sense to me. But he's 13. My youngest, he doesn't even care. He's like, man, whatever. Totally different personalities. But I wanted to talk about Dick's Sporting Goods, which had a big drop. Um, and man, if in regards to the week, it's down $56. And I kind of understand, they were saying that, I didn't know Dick's bought Foot Locker. That was something else. Dick's own they own Foot Locker. Foot Locker may be considered maybe their lower end. Dick's is expensive. I don't know if you ever been to Dick's before. If you have kids, Dick's is expensive. Everything in there is the higher tier in regards to athletics. But I mean, I like Nike. I buy a lot of Nike things, but the new, I guess, new styles or whatever they're coming out with, trash. I mean, let me not say trash. I just don't like it. Like everybody now has these shoes that have the big sole, right? I don't like that. I don't know about you guys, but a lot of people have been complaining, and the consumer, do they always vote with their dollars? And a lot of people complain. It's like, look, what they're offering, I'm not willing to spend, and it costs so much money. Of course, everything costs a lot of money, but you know, I can understand how the problems that Dick's is having. I don't know how they work their way out. I mean, I know a large percentage of the sales is Nike. Nike's been doing horrible. But I mean, I like Nike, but I just think their designs, they're not like, they've been kind of average. It's not something like, yo, I gotta get those. Like those look great. They haven't had anything like that. I just buy it because it's comfortable and I like the brand. But anyway, thought I'd talk about Dick's. Man, and so man, that is really it for the week. I do want to get into also talk about Salesforce. And one thing I thought was Agent Force. They did an investment in Anthropic. I I wanted I did discuss how companies invest and how you should be investing. Also, companies invest in other companies when they can get a portion. They earned $2.6 billion in this investment. All right. They increased their revenue of 11%, $200 million. But one thing you have to watch, one thing I want to give, you have to watch earnings. When people list earnings per EPS, which is called, and it's earnings per share. And what they'll do is they listed an earnings per share of $5.90 per share. That means for every share, when took the earnings and divided it amongst all the shares outstanding, it came to $5.90, right? But the real earnings was like $3 and some odd, like $3, because they had to take $2.53 out of it because it was a one-time gain just from the stock sales. Now, hopefully, Salesforce will reinvest those monies and create some more. I know they just got a contract with the Veterans Administration, and they also just purchased a new company. I forgot the name of the company, but I thought it was interesting. The stock has been down like 20% on the year. It's been really, really bad. Ticker symbol or CRM. But I thought will bring it to you, and we'll see, man. But I like it because they're really showing that AI is really working and people are paying for it, right? People are paying for it, and they have generated some revenue. May not be tremendously, but they are generating revenue off of Agent Force, which is there. And I've used Salesforce before. I work in sales. I've used Salesforce before, and it's a pretty cool platform. Haven't used it in a while. Haven't used it um, with the AI, but it's pretty cool. So that is it for the show today. I hope you guys enjoyed it. Hope I would give you some great information. Like I said, Nvidia is on the move. Tomorrow we'll see how it performs. We'll see how the market closes tomorrow, and that lets us know. We may get a little between you know Friday and Monday. We may get a little bump in the market, but I believe in September we are going to be headed for a risk off period. So I just say what I'm telling you, and I'm telling the club. Of course, I'm getting more detail in the club, and I'm saying what we're going to directly invest in, preparing for. Put some cash aside and prepare yourself and be able to take advantage of the opportunities that may possibly come. It's no guarantee. I could be wrong in the risk off. The market could move on, but we'll see. All right. So I'll be on here every week, 10 o'clock. And next week we'll come in and see how we enter the month of September. This was just a collect dividend month for us. We didn't do a lot of trades in August, but we're looking at actually I did do some trades in August. I'm in Apple right now. That thing has been up and down. really haven't produced a big profit. But, I believe by the end of the year, Apple kind of moves really slow. I didn't really want to put my neck out there. I thought Apple was a pretty safe bet. And it's been up and down, but we'll see how it ends up. And I'll give you guys a report on that. But like I said, I like oil and gold. And I'm positioning the club to invest in those for September. I think there's going to be some opportunity there. And so we'll see. All right. So, man, once again, my name is Donald Green. I'm the founder of the First Fruit Stock Club. And until next week, I believe you and your family be safe. I wish you guys a successful school year and be fruitful. Bye bye.
The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow. Give